The one area where I have put out, it's not an official target, but the IGV, the software ETF, I said several months ago when it went through its first sell off from its highs, I said I think it can get back to 110. And it got up to 108, a few months ago, and then sold off again, or a couple months ago. And it looks to me like, and now it's 102 or thereabouts, that 110 still looks like a right shoulder on a head and shoulder top. If that's correct, it peaked, pre-Iran, I think. I don't remember exactly, but so its top was before. It had a left shoulder on the other side of that top, and I think we're forming a right shoulder at 110. Again, it can go to 112, 114 and still be a right shoulder. I think the top was up 116 or somewhere above that. If head and shoulder top, software may not go to new highs. And, AI is part of that. Microsoft looks pretty good right now, so maybe that's not the case. We could go on to new highs. But if that head and shoulder holds, that is one group where we may not see new highs. But I think in most of AI, I think you're going to see new highs and, another 30% plus, plus from here. So I don't know how much above the highs that is on some of them. But, Google and or Alphabet and Amazon and some of those, they still look fine. Apple looks okay despite the weakness this week. So I do think there's probably room there. On the other hand, they didn't ask this question, but when I do the numbers on my targets on things like the XLF, which is the financials, or the XLB, which is materials, you're looking at, in those cases, 50, 60% upside from here. So maybe double what you're getting out of tech now. So tech still has room to run here, but more like market performance from here or a little better. Whereas some of these things that are just coming up now that are, kind of the old economy or the more conservative stuff, some of those things are going to be the real outperformers in this final run.
I'm extremely, as my audience will know, very, very active in AI. Maybe I'm in an echo chamber. I try to get out of it, but I'm pretty connected in Silicon Valley. I'm an investor. I use these services in a very complex and deep way every day. I look at its IQ, its intelligence. I look at the compute. I look at everything that is happening. And the last 2 or 3 months have been accelerating beyond even me, who was an optimist, what I would have thought. I look forward, forget 10 years, maybe 3 to 5 years. I'm seeing billions of AI agents transacting. I'm seeing millions of humanoid robots. I'm seeing potentially capitalism as we know it, with labor costs coming way down with robotics, to now where I'll challenge you on maybe the oil part. AI may solve for effectively, let's broadly call it fusion energy. Energy cost goes near zero. In other words, capitalism broadly as we know it will change. Everything will change. I don't know if I'm giving much of a counter to the one world government that you noted, although I presented other opportunities right before it. But I do know, unless there's nuclear war and we all go in bunkers and there's 5,000 people left, AI is going to march forward, and there will be changes relative to robotics, to space, which we didn't have enough time, even SpaceX, to get into, coupled with, again, energy. Maybe you may think 50 years, like I may think within 10 years, going to near zero. Where am I crazy? Where might I be right? And again, we're both taking out a crystal ball, making some guesses that are for sure going to be wrong, but maybe there's elements of what we're saying that are going to be correct.
Yeah, I think your scenario is the hopeful scenario that could cause mine to be moot. I mean, it's certainly people smarter than me, like Elon Musk, would tell you that there's a huge future ahead, and it's not anything like what I portrayed. So I'm the first one to say that's if anything's gonna be a solution to this and lead us to a place where it's far more optimistic than I portrayed, it's probably that. And I agree. I think if we have fusion, or if we have things that can really take care of the energy inflation problem, that that can ameliorate things. My biggest problem, and why I stick to my guns on my scenario, and why I'm pretty gloom and doom on what happens a decade out, is because is because of the bust. There's only one response that I think the easiest part of my forecast, the forecast, the shorter term forecast, the forecast of the next 5, 7 years, any of it, the easiest thing, the most predictable part of it is the response to a bust. The timing of it could be a little different than I expect or what have you. But ultimately, if we get a global bust, the human response to that, whether it were Powell or whether it were Warsh or whether it were somebody else, is very predictable. They won't have a choice. There's no other solution but printing money if we get a bust. Now, and you may argue that we aren't going to get a bust. That's a different thing. But if we get a bust, I think you're going to see it's going to take a very big amount of money, and that very big amount of money with a lag will create inflation in spite of AI. Now, beyond that, so that takes care of, let's say, the next 4 or 5 years. In that 4 or 5 years, it's very possible that some of those things you mentioned can help soften the inflation, and more importantly, can kind of overcome a lot of those things and move us maybe in the next 5 years after that first 4 or 5 into something that's far different than what I portrayed. So I won't say that can't happen. I think it's low probability, only because I think we've spent 90 years in this ramping up excesses and imbalances to levels that are beyond comprehension. We talk about trillions today like we used to talk about millions. And I don't think anybody grasps the magnitude of the leverage in the system, the magnitude of the imbalances, the magnitude of the excesses. And when you get to those levels, it becomes unmanageable. That means when you make a mistake, it happens fast, and it happens in ways you just never could comprehend. And that's really what I'm talking about more than anything else in this, is that Warsh is, as I said, the most qualified Fed chairman. He has no, if you sat down with him and it was totally honest, it wasn't, he has to be careful saying things, but if he was able to be totally honest, he doesn't see any of what I'm describing. There's nobody in government today, or certainly nobody in policy making places today, that has any idea of what I'm saying is coming next year. They may say recession, they may say it could be a bad recession. I don't think there's anybody in the Fed or in and Bessent's the most qualified Treasury Secretary we've ever had. Smart guy, very smart guy. I don't think if you sat down with him and you were honest, I don't think it's just protecting, can't say these things because of my position. I don't think any of them are really understanding, and I don't mean it by I'm smarter than anybody. I just don't think anybody is really prepared for this being bigger than 2008-9 by a lot. Faster, steeper. If I'm right, that means the response is going to be unbelievable and lead to those things I described. If I'm wrong, if we don't get anything close to a bust, if we have a hard landing but not a bust, and kick the can down the road, then everything I'm talking about may come way down the road, or maybe doesn't come because AI has enough time to work its magic. I fear, because of the bust being so imminent, I fear that there's not enough time for AI to really offset that.
Related to that, in some of your prior comments, and with all due respect, David, your targets climbed the whole way up: 4,500, 6,000, 8,000, 10,000. Skeptics say that's chasing the tape. If you don't mind, maybe defend is not the right word. Explain, or if you want to use the word defend, the method.
Yeah, I'll start with prefacing John Maynard Keynes, who, when criticized for his forecasting because he changed some forecasts, said, "Dear sir, when the facts change, I change with them. What would you do?" And I would say that's if you talk to any macro strategist, you're giving this isn't the price is right. This is not put out one number and never change it. You can't go over, like if anybody knows the game show, The Price is Right, you try to guess the product price without going over it. Well, this isn't that game. We're looking at new data every day and every month and every quarter. And so as things change, you change with them. So that's the first defense. The second defense is I've remained steadfastly bullish from basically the lows in March of 2020 until now, because people will say, "Well, you've been calling for a bust for 6 years." And I said the bust comes after the bull market is over, and I've remained steadfastly bullish from the beginning. So from 2020 or before even. So I don't know what the problem is. I mean, yes, I've changed. I've raised them as I saw. The other thing I would tell you is that if you look at when I make my changes, I get criticized for this sometimes because people don't understand it. Sentiment drives me a lot because I'm a contrarian. I'm often raising my targets when everybody else is turning much more bearish, so that I'm not raising them with the momentum. I'm raising in the opposite direction. In April of 25, when we had the big drop when Trump announced tariffs, as you remember, we had almost every strategist out there was lowering numbers and saying the bear market has begun. We're going a lot farther south. We're going to 4,000. Maybe we're going to 3,000. It was at that 4,800 or 40. I'm trying to think where we got down to, but the lows of that sell-off was when I raised my targets because sentiment had gotten so bearish at that point in time. It was clear to me we had sentiment almost similar to what we had in March of 2020 after a 2-week sell-off. So that's how my work is. A lot of it's driven by sentiment. Obviously, I look at fundamentals, I look at technicals, I look at macro, but sentiment is a very important piece of it. So along the way, I've been surprised. Obviously, I started with targets. I probably started with a target of 4,000 going into 2020. In March of 2020, I might have had a 4,200 target. And I've raised it, many times since then, 4,500, 4,800, 5,300. Those are the early ones. And then 7,000, 7,500, 8,000, 9,000, and now 10,000. And I've raised them in big leaps because my work just kept pointing to this thing has legs. And I was all the way through well above any other estimate on the street. I mean, even today, I think the highs on the street might be 8,200, and that's a very late. That's what we're getting today, I think, somewhere around 8,200 as high numbers, and I'm at 10. When I was at 9, there was nobody much above 7,600. So, I don't do it to be provocative. I don't do it to, get attention or to be different. I am doing it simply because that's what my analysis points to.